Donald Trump says we need to pick a new Fed chair early, like yesterday, the day before, last week, last month, and we're down to 3 to 4 names. So we're going to be conducting a review of the hot list, who's on the hot list, who's kind of a black horse or dark horse candidate out there on the list, what it means for rate cuts as the latest CPI report just dropped. We're going to be also talking about buying opportunities in the market, how the bears have been screaming bloody murder, and how tomorrow is going to shape up to be a very, very interesting day. All that and more for you lovely ladies and gentlemen. Thank you all so much for tuning in. So let's dive in. Jerome Powell is on the hot seat again when Trump is firing on all cylinders. He's citing that we need a new Fed chair early. Why is that? Well, we can just simply look at the bond market and tell from what's going on. And simply put, the bond market is like after the comments, right? We're going to take a look before. This was the CPI candle right here. And we can see the bond market did not take the CPI as easily. We also had Donald Trump basically say that he's letting the lawsuit go forward that will implicate Powell in fraud, which this spooked markets like no tomorrow. We saw the CPI report yesterday come in, and we have that report right here for you all to see. Kind of within the predictions that we set. I expected energy around 2%, came in at 1.6, not as down as I originally thought, but that could also be driven through natural gas. We saw this go from 2.9 to 3.1 for all major, less food and energy. So we can break that down later in the video. Food came in basically flat again, kind of citing that food prices are just fluctuating on a year-to-year basis. Overall came in at 2.7, almost exactly like it was previously. So no increase in inflation. We did see core tick up. Again, core is very slow moving. So from a overall risk perspective of the trajectory of inflation, I would not say that's remotely like important, right? If we look at what the CPI came in this week. So again, CPI 2.7, that's what we really wanted. 3.1, we're just going to ignore that because core is very, very slow moving. It'll be lagging behind the 1 or 2 months before, and we're not seeing a broader implication in all the other metrics. A friendly reminder is that PPI is tomorrow, and they're expecting 2.5 versus 2.3. Previously, 2.6 to 2.9, so they're expecting a big PPI print. I personally think this will come in at maybe like a 2.7 for core and a 2.3, 2.4 for PPI. I do not expect this number to come in as dramatically as they think. And if you guys think as well, throw in the comment section what you think it's going to come in at. I'm really curious to see what your thoughts are, and I respond to every last one of your comments down below. So even if you have a random question, throw it down below. I'm really curious to see. But Fed rate cuts are expected to be essentially a guaranteed cut in September. October right now is sitting at a cut as well. Two cuts guaranteed right now. December is where it gets really interesting as the odds have been increasing, and there's the idea of a fourth rate cut floating around. With the latest news, obviously this is staying in liquidity here, and Trump is basically pushing that, hey, I need rates lower. The modern market is already reacting to it, which is really, really good. But again, who is on the short list, right? Who is on the short list? Well, one of them is Christopher Waller. He was one of the current Federal Reserve Board of Governors. So he's a pretty advocate dissenter, right? He recently dissented from Jerome Powell in the last vote. He was one of the two that dissented in the vote. And that was really, really important because that means that he's not necessarily willing to go with the status quo. He's been openly talking about how rates need to be lower, and he's a very, very interesting person. Also, because he's on the board of governors, it would not take a lot of time to basically get him in place versus the temporary person with Moran is going to take a little bit of time because they have to go through Senate confirmation and all this other stuff. Christopher Waller could be streamlined to it. We also have Hassett as well, which is an American economist on the Economic Council since 2025. Again, this is someone that would take longer, like Moran, to get onto that board. However, he's openly been a virulent critic of Jerome Powell and would also be a very, very interesting person to be on the board. And we also got Kevin Warsh, which is an American financier, bank executive again, who's on the Federal Board of Governors. So again, you have Waller and Warsh both sitting on the Board of Governors, or previously sat on the Board of Governors in Warsh's case. And that was during the quantitative easing timeframe under Bernanke 26 to 2011. He also saw how the dissents of Tom Honan were. So he kind of seen a lot of things. These two picks, Waller and Warsh, the W's, would be a win for the market because they are more dovish than they are hawkish. Hassett could take either one, and they've even thrown out the name of James Bullard. You all will remember this guy as Mr. Raise Rates Like No Tomorrow. This would be catastrophic for the market if this person was elected to the board of governors. So that is why there's a big concern that maybe he's in the four, right? He was one of those people that basically had a huge raise rates to 10% tactic. And personally, I don't think he will be on the Federal Reserve chair board because a lot of people were happy when he was gone. And especially towards the end, it was just a bad time with all of them. So again, Waller, Warsh, really the two ones you want. Hassett is a pro-growth optimist. He's more better for small caps. So if you're thinking that he gets on the board, a small caps probably be the way. And again, it's just looking at the market and looking at the positioning, we can see the net speculative positions. Again, I like to remind everyone that they're shorting this market at 139,000 positions. And the market today looks like it's going to close basically flat to slightly up. Again, like to remind everyone that we are above the previous weekly close, meaning if we close here over the next subsequent days, this will be a new continuation of the breakout, a continuation of the expansion, and a continuation of the bears picking up pennies in front of the steamroller as they get crushed. So are you guys excited for this bullish run? Kind of stair stepping up. And then as always, I promise you guys opportunities that wouldn't just be NVIDIA. Even though NVIDIA right now is in a very, very interesting buying point, I personally would like to see a little bit of a pullback on NVIDIA. I would like to see an AVGO style candle here where you got almost a bearish engulfing, maybe come down to about 303 on AVGO to snag it up. You also had companies like AMD that have just been a rocket ship recently, having a gap on the candle today. I personally think AMD is heading to 200. That's where I'd be looking. We can also look to the risk on asset Bitcoin. Bitcoin breaking above 120 for a first time in a long time, leading to the continuation question. Is it going to get to 125? Is it going to push to 130? Is it going to push to 135? I think its next stop is 150. That's just my personal sense because the VIX is now sub 15. This is leading VIX back down to this 12-14 era where it's go back to sleep, calm, cool, collected market as we chug higher. And we can also turn to the fear and greed index to see that 63, we're cranking back up to that extreme greed territory. Again, if we get another confirmed dove as the Federal Reserve Board. Again, when Trump announces the person's name, the market is going to take it as this is how the Fed's going to run from now on. Meaning, again, it could be one of those big pushes and Powell basically becomes dethroned. He doesn't become relevant at that point. Anything that new person says is going to be the thing that everyone looks at. It's what's going to drive markets. And you have stocks like, for example, that Microsoft I've been talking about quite some time are just at these evaluations that are cheap, right? 523 on Microsoft is cheap. Hasn't really been pushing as much as other stocks like, let's say, Google or even Meta, right? Both have been pushing tremendously, and they're still discounted at the evaluations and the potential they have. We also see that this is a broader rotation today. It's not really a sell-off day because the Russell finally got back above its 2024 high and now is running to new all-time highs or trying to get back up to this crazy all-time high of 250. Again, with the sentiment that the Fed chair rate cuts are coming, that's going to be directly impacting smaller caps. Smaller caps are going to benefit from it. I've been talking it extensively. I really liked the bounce off the 50 here in the 200, kind of confirming that support and now heading higher. IWM honestly has the potential to be a bigger run than the NASDAQ. The Russell runs back in 22, 23 were absolutely insane. And again, Palantir, for example, is in the IW in the Russell and is taking advantage of it. We're also seeing like companies like Berkshire Hathaway finally getting a bounce. Palantir, can it hit 200 before NVIDIA hits its $5 trillion market cap? Throw down in the comment section below what you all think. But we're also going to talk about Netflix that recently got downgraded, kind of struggling to get back above this 50. But this is where the battle is won, right? Once Netflix breaks above that 50-day moving average, the sky is the limit. So make sure you guys have this one on your watch list. Does it break below the low of 1,160? Does it break above the high of 1,230? Throw in the comment section which one you think it's going to be. But if it breaks the upside, be ready for a buying opportunity. Be ready for that maybe retest and head higher to kind of form that inverse head and shoulders on the chart right there. So again, Netflix, as much as people want to bash it, it is in an extremely good position right now to make a lot of money. And we also see broader market just heading up higher as well, following the Russell, following all that. And a big name like UNH finally forming a bottom, I would say kind of almost like a double bottom around this 250 price point, trying to tackle its 50-day moving average. This is one similar to Netflix. I would be looking when it breaks above that 50 because you got a nice long room to run to the 200-day moving average, leading to an amazing buying opportunity. And healthcare is not really going anywhere, so neither should you when looking at this company. And last but not least, Apple kind of pushing a little bit higher. It's kind of interesting. When you stop fighting the White House, magical things happen. Again, I'll point out NVIDIA, and I'll even point out Intel. You stop fighting the White House, Intel trying to fill that gap at 266. So for all the Intel fans out there, cheers to you. And cheer to the oil bears. We're probably going back down to $56 a barrel. Throw in the comment section what you guys think about crude prices, energy prices, how it's going to affect the CPI going forward. And I'm really curious to hear your thoughts. Make sure you guys check out the latest 2 videos over here and the Discord on the top left. Thank you all so much for watching, and I'll see you in the next one.